Hey, what's up, y'all? Sam Coleman of Love Local Real Estate here. Thanks again for tuning in to another episode of Sundays with Sam. Last week we talked about, let me catch my breath. Let's not do this there. I don't want to do this there. Hey, what's up, guys? Sam Coleman of Love Local Real Estate. I just want to say, guys, thanks so much for tuning in to another episode of Sundays with Sam. Last week, we talked about the benefits of buying a home versus investing in a mutual fund. This week, we're talking about the loan process. Some things that a lot of people may not know about, or some things that people may have missed in the process when they actually bought their home the first time. This is going to be a good episode, guys, and thanks again for tuning in. Today, I'm sitting in a new home. It's 2,600 square feet, 4 bedrooms, 3 bathrooms, plus a loft, and it also has a covered patio and balcony. The monthly mortgage on this is about $2,300 a month. For more questions, call me, text me, shoot me an email, and we're just going to jump right in. So today we have Crystal. She's a loan officer, and she's going to be going through just a quick Q&A about the things that you can do to get into a home. So, Crystal, let's tell us a little bit about yourself.
Hi, my name's Crystal. I'm a loan officer for All American Home Mortgage. We're a broker, so we have 17 different lenders to choose from. I'm from Colorado, but I've been in Nevada for 12 years. This is definitely home for me, and I love it here. I love helping people get into homes.
Cool. So why did you get into the loan process? What makes you want to help people so much?
Well, I actually started out my career in nonprofit,
Okay.
so my job was to help people. However, I didn't feel like I was making a difference.
Okay.
So I wanted to figure out a way that I could really help people, and what is more impactful than buying your home. So I'm helping people buy their homes, and I love it more than anything.
Cool. That's the same way I feel about real estate. It's kind of like when I played basketball, I was for entertainment purposes only, and sometimes I got to interact with children or some fans, but now I feel like I actually get to interact with people on a more personal level.
Yeah, really make a difference in their world.
Yeah, that's for sure. So now that you're in Vegas, you're in loans, what are some things that people should know about when it comes to starting the process of buying a home?
Sure. So when it's time to start your home buying process, we're going to do the first thing and pull your credit. So there's a number of things that could happen when we pull your credit. Your credit could be perfect and we could proceed with the loan, or you could have some minor repairs to make, maybe pay off some collections or address some outstanding issues, and we can still move forward. Or you might have some issues where you need to take a little bit more time and resolve them. All three of those scenarios I can help you with. So once we get past the credit, we start to look at the income. We take a look and see what all you can afford, and then we weigh it against your current credit liabilities, and then we come up with a pre-qualification amount. That's the amount that you can go and spend. So this is the pre-qualification process. With me, every pre-qualification requires all of the documents so that it's fully verified. The benefit of that, while it might be a little annoying to provide all those documents up front, is that we know we're not going to run into issues later, which could save you thousands down the road.
Okay, that makes a lot of sense. So hypothetically speaking, you have a client, for a viewer that's watching, they go through the loan process and they do have a hiccup. They have to repair a collection or something like that. Do you feel like that takes away the excitement to going through the process?
No, I think that as long as they have a loan officer who's strong like me, who knows what the issues are and how to handle them, that it actually should make the process more exciting because they're resolving issues that could cause a hiccup later up front.
Right.
So it should just be more of getting through issues, finding solutions. It's a positive thing. It should remain positive.
Cool. So would you say 2, 3, 4 documents, or what does that look like when you say the annoying documents?
Yeah, the annoying documents. So what we need is 2 years of tax returns. We need all the pages. We also need the supporting W-2s, 1099s, and K-1s if you're a business owner. So it's a lot of documentation on the tax side. We need 2 full years. So if you didn't file for this year yet, we need 2014, 2015, and then the W-2s and 1099s and K-1s for 2016.
Okay.
So that's a lot right there in itself.
Yeah.
We also need 2 months bank statements just to show that all the funds that you're going to be using for closing and your down payment are verified, that they haven't been given to you in cash. That's not allowed. All deposits have to be sourced. So I can also help with that. Just make sure that the bank accounts look good.
Okay.
And then we also need pay stubs.
Okay. Now, during this process, people are getting all this information and they're gathering all of these things, when exactly do they get excited about going to see the home that they may potentially buy?
I think it's best to wait until you have your pre-qualification letter to get excited. What I do when I fully verify somebody is I run all their documents and I run it through a program called DU. It's an automated underwriting system. So I also confirm that there will be no problems down the line with anything that I might have missed, which it's rare, but there might be something with a trade line. Say somebody doesn't have enough like active credit items. They might have a 750 score and one item on their credit report. Sometimes that's not enough to get them qualified to buy a home. So while somebody might pre-qualify that and say it's good to go, the DU might say it's not good to go, and they might need a credit signer, a co-signer. So by running it through DU and catching that, we prevent any problems of getting too excited up front. But once you're fully verified and pre-qualified, that's a good time to get excited.
All right, so basically, the thing that matters the most is cooperating with your loan officer, talking about your documents and getting the things that you need to get that pre-qualification. So it's basically on the purchaser.
Yeah. I mean, I try to make it easy, you know, by just being there. I accept faxes, photos.
Okay.
I'll come to you if you need it. You know, you can email me. But yes, it is. We do ask for those documents up front, but it kind of makes for less work down the road.
Okay, so that's a very, very, very good benefit to have in your loan officer. Somebody that's willing to do the work up front to save you time and money down the line. So not to confuse anybody on all of the different loans and all the different products out there, what would you say for a home around $280,000? What would be a standard loan?
Well, it's going to depend on the borrower. And I think that that's the most important thing to remember is every borrower has a unique credit and income situation. And there's a unique loan out there for everybody. There's FHA loans. The loan limit on those goes up to $287,000. The credit score goes down to 580. My firm actually has a credit program down to 500 on FHA. So we have, as a broker, we have access to many programs. So the standards are FHA, like I said, with a 287 limit. And then we also have a conventional loan that we can do any loan amount up to $417,000. And then we have VA loans, which go up to $417,000 as well. And then we have all sorts of non-QM loans, which would be loans for people who maybe had a bankruptcy recently or a short sale or foreclosure, or maybe they're self-employed and they claim very little on taxes, but they still have that income and we can still show that on bank statements. We have programs for that too. So aside from just FHA and conventional and VA, we have other programs. But for a $280,000 house, it's going to be FHA or conventional or VA, and it's really going to depend on the borrower.
Okay. Now, what about, so I've actually run into clients myself who've been affected by the crash a few years back, and they filed bankruptcy. What would you say would be the best road for somebody who's filed bankruptcy less than 12 months? What would be the direction that they should go?
I think it really depends on that person's financial goals and their profile. If they have a credit score that will meet the requirements of the day out bankruptcy program that we have for funding, which is 640, we can get them a loan with about 20% down. Now the interest rates aren't going to be our prime interest rates, they're a couple points higher. So if the person's goal is to own a home, then we have a program for them. But if they can ride by and rent, or if that's what they desire to do, I mean, we can get them into a home if that's the priority.
Okay, that makes a lot of sense. And hopefully, you know, people are recovering from that time, and there are programs that have been put in place to help people recover. But in this time now, where we're going to a little bit of a market shift where inventory is low, how important is it to have a loan officer that's going to be punctual?
I think that's probably the most important part of your offer, is to make sure that your loan officer is strong. For me, I always provide a DU approval along with a pre-qualification letter so that the other agent, the accepting selling agent, knows that, you know, this offer is fully backed up. I always answer my phone and talk to that agent and reassure them that that's going to be the loan and that's going to be their buyer. So I think it's really important to have somebody who picks up their phone, especially on weekends and nights when agents are reviewing offers.
Crystal always picks up her phone. She does always pick up her phone.
I do.
Now, let's say we're going through this process, we got the pre-approval, we have this home, the clients are excited about it. Now what? we got the pre-approval, they found the house, now what?
Now you make an offer. So you make your offer,
Right.
you get that offer accepted.
Mhm.
So you shoot me the purchase contract, the client, I just double check with them, make sure, hey, I send them over a loan estimate, show them all the breakdown of costs, after contacting title and getting the property specific fees, and then having a good idea of what insurance they want to use, send them a loan estimate, and then they sign that. Once they sign that and kind of intend to proceed with me as their loan officer, we order the appraisal. That appraisal takes about a week to come back, and then we start, the file goes through underwriting, and within about 2-3 weeks, we can finish.
Okay, now for the viewers, for first-time home buyers or people that have never even went through a process like that, what is an appraisal?
Okay, so the appraisal is actually ordered by the buyer. It's paid for by the buyer, but it's proof of how much the house is worth. An appraiser is somebody who's certified to go out and basically assess the value of a home. So our banks take a look at that value and make sure that it matches up to what your purchase price is, and they only loan a certain amount of that purchase price. So if you're doing a 20% down loan, then the value needs to match that on the appraisal.
Cool. So basically, all of the steps that are taken leading up to them actually owning a home, all these steps are very, very necessary. So a lot of times people, they feel like they're being bothered, or
Yeah.
they don't, every time you call them, you just need something else, or something else is happening.
Yeah.
How important is it for the buyer to be as punctual as it is for the lender?
Yes, it's 100% important we need everything that we ask for from the borrowers. So if we ask for something and we get it right away, we can close that much faster. If we ask for something and have to explain why we're asking, then it does take a little bit longer and everyone gets a little frustrated. So I think up front, it's really important to know we're going to be asking for quite a few documents. We need to see bank statements, transaction history showing earnest money going out of your account. That's one that some people wonder why. Well, it's because we need to make sure that you paid the earnest money, because that's getting applied towards your down payment. And all the down payment funds need to be sourced. So there's just certain things out there to prevent things like terrorism, believe it or not, that affect the loan process.
Cool. So now we have all this information. We've been punctual with you, and somebody brings you a referral, and that person wants the same exact thing that you've done for them. But this person, they don't have all their ducks in a row. They don't have the money down payment, but they have the credit. Mm-hmm. Is there a way that somebody can have earnest money deposit but not closing costs? Like, how are there loans out there for people that can't put 3 or 5 or 10% down or 20% down?
Yeah, we actually have a great program. It's a conventional loan and it's a 1% down, and all you have to bring is 1% to the table. You put 1% and the lender matches 2%, and we can actually do this loan with no mortgage insurance. So basically you're going to get into a home. Right now, the credit score requirement's 700. I just locked somebody in at a very good rate for this program, a rate that was better than our current Home is Possible and other down payment assistance programs. We were able to get them into this program, and they're not stuck with mortgage insurance for life or ever because it's rolled into the payment. It doesn't make the payment a lot higher. Say mortgage insurance on a home might be $250. This rate, by rolling it in, makes the payment only $100 more. So it saves on your monthly payment to do it that way. I always pencil out all the options for everybody and see what fits them the best.
All right, so what is mortgage insurance?
So mortgage insurance is something that is charged by the lender when you don't have a 20% down payment on a conventional loan. We have the option of actually rolling the mortgage insurance into your rate so that you never have mortgage insurance. But on a conventional loan, you do have the option of not having mortgage insurance once you're at 20% equity. Or if you choose to do a lender-paid mortgage insurance where you never have to pay mortgage insurance, it's rolled into the rate. Also, FHA loans have mortgage insurance for the life of the loan, as well as an upfront premium for mortgage insurance. So mortgage insurance just basically insures just in case you default on the loan. That's what they're insuring. It's a monthly fee.
Cool.
Yeah.
So on top of the down payment, the earnest money, and all that other stuff, what other costs should a person expect who hasn't ever bought a home before? What other costs should they expect in this process?
That's a really good question. Well, first of all, I just want to review. You mentioned earnest money. So the first thing that you do is provide earnest money, which is money that goes in and holds your escrow account open. So that can be anywhere, it's usually a percentage of the purchase price, $1,000, $3,000, $5,000, $10,000, however much it is. You put that into your earnest account. account and it opens it up, and then you're gonna pay for your appraisal. So normally those are about $500, so we'll order that, first couple days of a contract. And then everything else is gonna be up to your contract, so if you have inspections, the buyer has to pay for those up front. And then at closing, they're going to be putting their down payment minus the earnest money.
Okay.
And then there's closing costs from title as well, which include lender's insurance policy. Also depends on your title company and depends on the house. There's gonna be endorsements and inspections from the title company, and also a closing fee. So usually you're looking at about 1 to 2% of your purchase price to be for closing costs. Now, if you go with somebody like me who doesn't charge a lot of loan fees up front, you can save on those.
Okay. Cool. Well, that pretty much sums everything up. Thank you guys so much for tuning in to another episode of Sundays with Sam. And Crystal, thanks for joining me.
Thank you so much for having me.
No problem. I'll see you guys next week, and we're going to talk about my favorite coffee shop in Summerlin.